Hello everybody, welcome to my YouTube channel. I am the Chartist, and we're going to take a look at the SPY, QQQ, ARKK, and Bitcoin and get us ready for this upcoming week, alright? So let's start this off with a daily chart of SPY. Last week, on Friday, we had this big sell-off, alright? Now if you watched the video before, I warned you guys. If you watched my last video, I mentioned you guys we could see more downside, and we're getting this big downside with this big Clifford candle. It broke our critical support level. Okay, we had a previous high at 447.24. As you can see, we broke past that. We broke past the 20-day moving average, and we got the close. Okay, guys, keep in mind this is just one day of close. Okay, 1 or 2 days of close is not bad. Multiple close, more closes than that's where it gets really bad. Okay, so this chart is showing us that the rollover is starting. Okay, the rollover is starting. So what should we do? Is this a buying opportunity? Because we always say buy the dip and not the tip. Is this the dip? How do we know? Is it gonna go lower? How do we know it's gonna head back higher to the price target of 457? How do we know this, that it won't head down? We don't want to catch a falling knife, do we? Okay? So in situations like this, I like to use Elliott Wave. Now, first of all, before we get to the Elliott Wave, we have to understand that our next support level, where our next support level is, of course, we have the 50-day moving average. It's also around the same level where our previous high was, where we had this breakout at 441. So 441 is also a critical support level where I would look to enter. And of course, we have this support line down here around 438. Okay, we also have this triple bottom. 1, 2, 3, triple bottom. Okay, this is an area, this is a significant area on 436. We mean we have an area of liquidity just below it. I say all the way down to 433. So 436 to 433 is an area of liquidity zone. Okay, so those are the levels that I want y'all to pay attention to. I also want y'all to look at this 1 hour chart. Okay, in a correction, in a traditional correction, it's usually an ABC correction to the downside. As you can see here, this white line, you have the A here, the B there, and of course the C, I have it all the way stretching down to 443 to 445 zone. Why? Because we have an area that has not been filled. It's a gap. Okay, guys, I do want to mention that I have a Discord where I give my more technical analysis. So if you, if one video a day of technical analysis is not enough, I do have more technical analysis on my Discord, which is not free, but I do have a Facebook called Trade the Market. I'll leave the link in the description below, which is free. Okay, now I shared this back September 10th. This was when SPY was at 448.94. Okay, when I started trying to use Elliott Wave to try to predict how low we can go. Okay, so I mentioned here that, so judging by this chart, unless SPY can get back above 451, looks like it has more downside. It's a gap 443 to 445. Okay, guys, so you can see that right here. And we did get more of a downside. It dropped another $3 from when I posted it. It was working its way down from the second wave down to wave 3. We got that bounce off the critical support level, went up for a wave 4 and down lower for the 5th wave. So what I'm saying is, the A wave is a 5 wave to the downside. The B wave is an ABC wave. You can see here, A, B, C to the upside. And then down we have another 5 wave to the downside. So 1, 2, 3, 4, 5. Now where would the bottom be? I would look to enter around this zone, the 443, 443.50 to the 444.72. We'll see if we can get that gap fill. If we get that gap fill, I would probably look to go long. Okay, because this looked like a good enough ABC correction to me. It looks like we're looking for the bottom, but I'll definitely be watching, okay, to see if we can get that filled, and maybe we'll get a bounce up from there. Of course, you got to manage your risk, okay? Now let's take a look at the weekly chart, because that was a small time frame, the 1 hour time frame. Let's lean back a little bit. Let's zoom out. So you got the 5-day moving average at 447.61, which SPY has closed below. So the next support level, as far as moving averages go, would be the 13-week moving averages all the way down at 438.5. Okay, and the 20-week moving average, which is very critical, is at 431.95. Now let's take a look at a monthly chart, and the 5-month average is down there at 436.72. So if we look at the monthly chart, this is still a very parabolic looking bullish chart. Okay, it hasn't even touched the 5-day moving average yet. So that's something to keep in mind, because September is usually one of the more bearish months of SPY. Okay, I'm not a perma bull. I'm a bull in the bull market, but I'm not a perma bull, guys. Gotta watch these price actions, okay? And we are extended from the 5-day moving average. So even if SPY drops all the way down to the 5-monthly moving average, which is at 436.72, the monthly chart still looks bullish, guys. All right, so keep in mind, 436.72 is a critical support level based on the monthly chart. Okay, the weekly chart, it broke past the 5-weekly moving average, which is a bearish move. Okay, but we could watch for that next bounce around 438, which is really closer to 436. Okay, so looking at the weekly chart, it's still looking bullish, but I definitely, like I always say, look for buying opportunities. So if the 443 level to 445 level does not hold, which is where the gap is, I will look to enter around 438 or off the support level, 436 to 438 zone. Okay, and below that, definitely watch 432 or 431.95. Okay, those are critical support levels, guys, based on the weekly chart. So that's a more macro level. Okay, so we're looking at these charts. It's still looking bullish. And you got the fear and greed index is at fear. Okay, so like I told you guys before, I like to use it as a contrarian indicator. So when most retail traders are fearful, I like to inverse that. I don't want to follow the crowd of retail traders, because retail traders, most of them lose. About 95% of them lose. Okay, I don't want to be part of the 95%, so I can't think like them. All right, so yeah, this is still a bullish chart based on the weekly. Definitely watch for the support levels. Definitely back to the daily chart. Definitely watch to get that gap fill with the blue zone. You don't really see the gap on the daily chart, but if you look at the 1 hour chart, you will clearly see it. Okay, so let's see if we can finish out this ABC wave, complete that 5th wave down. So that was 3. I mean, technically speaking, guys, it doesn't even have to come down to fill the gap. It can. I'll definitely be watching it, but it doesn't have to, because the 5th wave down is lower than the 3rd wave already. So it's meeting all the rules, okay? But still, definitely be watching. I'm still going to stay on the sidelines, but if we can get that gap fill, I'll probably look to go long. All right? Of course, you got to manage your risk. And if that gap fill not enough, I'll look to enter more at this previous high. Right here is also where the 50-day moving average is. Okay, we have plenty bounces off the 50-day moving average. All right, don't get bearish at support. At support is where you want to look for buying opportunities, not selling opportunities. At resistance, you see this resistance right here. That's where you want to look to take profits. Okay, in an area of liquidity, like it broke this area, like if this was to get broken, and I see SPY break past it real quick, I would look to short there in the area of liquidity. That's where the market makers will look to fake us out, okay? All right, but other than that, I'm still going to be looking for buying opportunities. My goal for tomorrow, or plan for tomorrow, is definitely watching for the gap fill and see if we can get that bounce. All right, because we got too many people being fearful, too many people betting to the downside. Okay, I think the market makers might screw them over this week. We could find a bottom, all right? But it's not guaranteed it'll happen, but definitely keep your eye out. I think it will, though. I'm confident it will. Looking at QQQ, we had the breakout here from this line. QQQ failed, had a false breakout, and then it started trading within this range. Had a breakdown from that as well. Okay, so the next support level is at the 20-day moving average right there at 374.5. Okay, by tomorrow it probably look a little higher. So 370.5 to 375 range. That's a critical support level. We're gonna see if QQQ can hold that level. All right, and if it doesn't, we still have the 50-day moving average at 367.86. And of course, this support line right here around the 365 to 366 zone. I'll be bearish if QQQ drops below that. But right now, I will be looking for buying opportunities off of one of these critical support levels. Right now, the current critical support level I'll be watching for is this 20-day moving average at 374.5, where I will be looking to go long. Average true range is around 3.62. So if it drops below, I'll probably cut my loss if it goes below 371. And then I'll probably look to re-enter around 368, 367 zone. Okay? Maybe down to 365. Okay? We'll see what happens. But that's my plan for tomorrow. I am bullish in the bull market. Okay? It's getting red. It's getting bloody. So that's going to raise the fear. When the people get fearful, I'm going to get greedy. All right, moving on to ARKK. ARKK still looking good, guys. We had, this big Clifford candle. I know it doesn't look good, but you look at the overall price action. We had this breakout. It's still holding above the breakout level. You see the 20-day moving average right there at 120.39. If we can hold above that, that would be, it could potentially be a double bottom right here, which is a bullish price action. And we could head back up. We hold in the breakout. That's good. But if not, if we violate this and it breaking down, I think we will see more downside all the way down to 113 to the 110 level. All right. So bears, that's the time. That's the time for you. Okay. If we get the false breakdown. If we don't get the false breakdown and it holds, I think we could head back up to my next price target of 132. Keep in mind, right now, the area of liquidity for ARKK is here. All right. So around here, market makers may push this down, give us a false breakdown or a bear trap only to push it up. Okay. So if you're going to enter, look to enter in this zone, right? Where's this zone at right now? Below 120.39 down to 118. It's a good zone. They might try to fake us out only to push us back up. Okay. So we'll see what happens. You can either look to go long around there, high risk, or you can watch, see if we get the false breakdown and see if it holds and then see if it moves up the next day. Okay, you can make money while it's on the way up. So most people want to catch the move before the move happen, but you can still make money when the move happen. Okay, instead of buying it before it heads up, you can buy it when it's on the way up or while it's on the way up. Okay, after you get that confirmation. Depends how much risk you can tolerate. All right, so I'm still bullish on ARKK. Watch for the false breakdown. We're in false breakdown territory. All right, it has to close. This is a daily chart. It has to close. If it comes down intraday a little bit, don't get too scared. All right, let's take a look at the weekly chart for it real quick. Not bad. It's still trading above the 50-day moving average. Okay, so looking good still. All right, definitely watching that level. Yeah, so bullish on ARKK as long as it stays above or closes above 120.39, which is the 20-day moving average. We have to hold above this breakout level. Okay, now let's move on to Bitcoin. Bitcoin is looking a little funny. As you see these blue lines, I got it. I've been saying for a while that it's following Wickoff. So if it continues to follow Wickoff, this should be phase, what is this? Phase D. And phase D, it's going to get a bit choppy around here. It could get choppy, finding a range, and then it'll head up higher for phase E. Phase E, we're expecting much higher prices for Bitcoin. All right, definitely check out Wickoff's accumulation. That's what I believe we're in. We are in phase D. Definitely check it out, guys. I'm still bullish on Bitcoin. However, Bitcoin's not holding above our critical support levels. It's actually breaking down from critical support levels. Okay, we got resistance right now at 45.3K. The 200-day moving average at 45.8K. Those are critical resistance. We need to break it back above. We need to get back to the 46K level. And then maybe we can test these moving averages up at 48K. Right now, price action is looking a little bearish. Wickoff says that we should be getting choppy price action. But at the end of the day, price action is king. Okay? So right now, our critical support levels are now currently our critical resistant level. Okay, we see more downside. Pay attention to this previous high right here. This was a strong breakout right here. So 42.2K is a very critical support level. Below that, we can get more downside. Okay, now keep in mind that 42.2K was previously a double top. You see here, didn't touch here, then it touched here, came back down, and the strong breakout. Okay, we haven't fully got the retest yet. Remember, I always tell you, kind of like with ARKK, you gotta get the breakout. You want to see the retest. We touched the area of imbalance, filled it up. I want to see it touch this. Okay, so watch that 42.4K. All right, 42.4K was the breakout level. So let's see if Bitcoin can come back and test, because it looked pretty bearish right now. I'm not gonna lie, it's failing to get back above our resistance level. Okay, so price action is looking bearish. It could be more downside. So I want to see if this will hold 42.4K. And if it does not, guys, there's a big chance that we can come back down to 29.2 to 27K level, okay? We got this triple bottom. So below that is the area of liquidity where I will look for long positions, okay? I believe they could take us out. Just keep going on the way it's going. All right, let's look at the volume. Yeah, it's low volume right now. It's going down, but it's on low volume. You know, that's a good sign for the bulls, but hey, still, price action still bullish. Like I said, I'll probably look to buy here, 42.4K on the retest, successful retest of the breakout level, okay? So, that's it for my technical analysis. That's my plan for this coming week, what I'll be planning to do. I hope this was able to help you guys out in this crazy market. Good luck this week, y'all. Stick with your plan, stay objective, and I'll see you all soon.